Hi everyone. Today is July the 18th, and this is the Moneyball Morning Report for the Benzinga Pro platform. As a quick reminder, I will be on Top Step TV, as I am on every Thursday morning, for Fast Markets Trading Live, and you can see me there and hopefully get to see what Trading the Futures live in a space of sort of a talk show host slash trading event looks like. And of course, it's on YouTube, so check it out. All right, so let's take a look at SPY. As I mentioned yesterday, my thought was, listen, we are likely to come into a reversion to the mean, and here we are doing that sort of thing. So my suspicion is with the SPY, the high 564 is going to stay there for a bit, and then 561 resistance for the day, and a newer level of resistance at 559. Where are we going? Potentially 550, 550, all the way down to 551. Now, here's why trading this is a little bit tough. One, we know that it's a bullish formation, so there are always going to be dip buyers on the edge. So shorting a low in this kind of formation is a very bad idea. Shorting a low when trend is down, momentum is down, and the volume behavior by trend is also down. Not a bad idea to short on the low. Here, very bad idea to short on the low. Why? Risk expansion. Now, yesterday's VWAP is 560.65. I wouldn't be surprised if we bounced into that number and then faded from there. This morning, the charts look a little bit bouncy. Are we making higher lows? Well, the answer is still yes, relative to the big picture. Dip buying is going to be the first order of the day into resistance, and that resistance will then tell us what to do with the rest of the day. So as it sits, listen, if we get below the close of the prior day, which is where we are fighting right now, at the 558 zone, it's going to tell us, hey, listen, the buyers aren't going to be as enthusiastic. You want to be careful, want to make it frame out properly before you move on. Okay, so what does frame out mean? I'll go very quickly and we'll look at this day, July 11. Well, let's scroll back, see if we can see what framing out a formation looks like in a bounce pattern event. So let's say that the price action really is a buy the dip, but you're waiting for it to hold a bottom. Look at how long it takes. It takes almost the entire trading day before the chart holds the frame of, wait a second, clearly buyers are not letting me go lower. They're snapping it up as soon as it gets into the range, and then that resistance area sends it to the next area of a pullback that goes higher, and then overnight, and then all of a sudden it takes over. But you can see this dip buying remains the buy well into the next trading day. All right, so today what we are looking at is that same kind of formation. We want to see price action hold its bottom over and over and over again. And if it doesn't, we know there's a problem. So you can buy the dip, buy the dip, buy the dip. The moment that it breaks the pre-market low, and that number looks like about 557 right now, there is trouble. Okay, let's go to the Qs. Oh, what do we have on the docket today? Sorry. Sorry about that dead space. I thought I was going to Econo Day and it didn't give it to me. All right, so let's see. We've got, today's the 18th. We've got jobless claims at 8:30, Philly Fed at 8:30, leading indicators, at 10 o'clock. What are those? And then the Fed balance sheet at the end of the day, a couple of Fed speakers. All right, so here's what's happening. Here are the Qs. Just as I suspected, listen, I said 486, and then potentially this area of congestion right here, which is 478. I still think we go there. You might be looking at this going, wow, has the trend changed? Well, what if this EMA, instead of a 14, was a 30, right? It wouldn't be telling me that I had a change. And so the question is always the following: where's price going? Price is going to the place that it was most accepted in prior days, and we can see that that is somewhere around this area, 479.55 to 478. My suspicion is that we do have a bounce, and that bounce takes us into a resistance zone at around 490, at which point it will fade again and give us this sideways formation. Maybe folks are thinking about a head and shoulders pattern building here. I have no idea. I don't believe in the head and shoulders pattern. It just looks, whatever. I just don't want to ever see a person that looks like this on the street, right? I'm going to run the other way. So that pulling back, it should bounce into resistance and then head into the heavy congestion area where everybody agrees that price was doing very nicely. This pullback of savage up days is very normal. It's absolutely normal. So we want to see it fade and then potentially give us another buying opportunity closer to either 478 or 473. All right, taking a look at the futures, everything's playing out fairly well, right? We have bullish trend, so we know that they're going to be dip buyers, but we're also in a reversion to the mean. So when you're in a reversion to the mean and you're in a bullish formation, what it's going to do is make selling the new lows tricky. So you don't ever want to do that. You don't want to sell the new lows. You want to sell the old lower highs. And that's what we're looking at here. Ideally, the sweet trade is going to come at the bounce into 56.75-ish, yesterday's VWAP close. If we're lucky, we get that. That's also the low of 2 trading days ago. 56.73, I love that area for a nice short. And then a pullback, and the buyers start coming in at 56.30. Now, my suspicion is that that's what they're going to try and do. If, for happenstance, we made this a 20 instead of a 14, you can see there's still a ton of bullish action. I'll go back to the NQ so that you can see that. This is why I don't love using moving averages. Well, that's probably means a 30 right there, right? I don't love moving averages to buy areas. What I like moving averages to tell me to do, they tell me, hey, what's going on in a big picture? Am I still moving up? Yes, okay, look for the last areas that everyone agreed value was the most important thing to look at. And that's really all I use a moving average for. I don't buy off of them. I don't sell off of them. I don't do anything like that. All right, first, let's see what's going on. My thought was that we would bounce right off that 20,000 area because it's a big, fat, round number, and everyone loves that, right? And so notice, here's the low here, 19,965.75. That's 35 points, thereabouts, away from 20,000. So if you're trying to pick a bottom and you're giving yourself 10 points of risk on the NAS, I know it says YM up there, but I haven't pressed enter yet. On the NAS, you're going to get washed out. Watch for it to come in deeply and then bounce and give yourself a go. All right, how does that look on the 30-minute? All right, this came, wow, this moved right after the close, which this area between 3:30 and 4 o'clock, I really hate trading. I do not trade it. It's very messy, very choppy. And you can see, look at how many times they tried to hold 20,000 and then it just collapsed, washed out all the traders there, and then boom, moved right back. And that happened several times yesterday. Several times yesterday. All right, so now let's go to the YM. Go to the daily. I don't know why these things look so terrible. Maybe we use the 2. I need to ask the guys at Transpider about that. All right, so here we are pulling back. If we noticed yesterday, YM and the RTY pulled back a bit yesterday, and they're taking a breath. Look at this. 1, 2, 3, 4, 5, 6 up days in a row, and not 6 little up days in a row. 6 big up days in a row, right? Good size up days in a row. Last time we did that was over here, and it was off of a floor of support, and it went 1, 2, 3, 4, 5, 6, 7, 8 days up before it took a breath for a couple of days, and then rocketed off to the next leg higher. Is that going to be something we see here? Quite potentially, right? Areas to look at. I drew the levels there. Pullbacks are about, look at this. There's literally no volume sitting in these patches right here. It's very thin. We could pull all the way back down to 40,589 and then bounce. Here's the thing. Are we below the close of the prior day? Why, yes, we are. We absolutely are. Are we below the close of the day before that? No, we're not. And so we're heading into a floor of support around 41,254, at which point it's going to be another buy zone. And so the question remains, how do we trade this, right? How does this trade? And the 30-minute chart works wonderfully for this. And what you can see is we've got this 30 EMA. It's telling us, listen, things are bullish. If you want to move it to a 50, you'll see things are bullish. I like to leave it at those 20/14 areas, and then instead just draw yourself a trend line, right? And you can see that it's broken. So what it's going to be moving into is a lower level of support, and that's where your volume profiles are going to help you, and the areas of prior resistance. To me, this looks like chop, 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 chop. Failure to recapture the value area high at 41,505. We move down to this area at 41,090. This is my thought, all right, for the YM. All right, let's take a quick look at oil. This, I have to tell you, this surprised me. I thought that our run-up off of the 80 would stall out between 82 and 82.50. And it ran all the way almost to 84. So I need to move. No, I can't move that line. That's where they're sitting right now. I'm going to add another line. I'm going to clone this one. And I'm going to take it up here for the highs. 83.80, top edge. Is this a bullish formation at this juncture? Yes, it is. From a daily perspective, it's still horribly landlocked, and we are not making new highs. Now, if per happenstance today with, I don't know, it's nat gas report today, right? Whatever. If this breaks 83.80, we're going to head back up to the value area high near 84.50 and then potentially 85, where I think it will sell off again. Right now, I'm willing to wager that 84 is going to be our high, so I'm going to be looking around that area to short. Gold is still having a case of the zoomies. Look at where it faded yesterday. Perfect. 42.55. It's the old wick from here. And now I'm sitting above the open of the prior day, below the open of the prior day, but above the close of the prior day. And so I'm caught inside of the range. That tells me I can wait coming into the value area high, maybe 24.30. I don't know when this will get noisy. It could be we have a number of bills. We have a 2-year auction and a 5-year auction. So that might be something, and that happens at 11 a.m. Eastern. So we might see a little jigglies there. Okay, I believe this chart is going to 2,500, but I would not be surprised to see it moving in sort of great big slogs, pulling down and then popping up and then pulling down and then popping up. All right, take care, everyone, and I hope to see you on the platforms.